Welcome to TechGolly Weekend News.
This week's top news headlines.
Trump signs executive order to delay TikTok ban. Proposes U.S. government ownership stake. Cryptocurrency market declines following Trump's inauguration. International paper nears EU approval for $7.12 billion acquisition of DS Smith. Trump announces $500 billion private investment in AI infrastructure. Saudi's kingdom holding open to investing in TikTok if Musk or others buy it. Meta users report automatic refollowing of Trump administration accounts. Former Amazon executive Doug Gur appointed as interim chair of UK competition watchdog. UK regulator launches investigation into Apple and Google's mobile ecosystems under new digital competition law. Google acquires HTC XR talent and IP for $250 million to accelerate Android XR development.
President Donald Trump signed an executive order on Monday postponing the enforcement of a ban on TikTok by 75 days, allowing more time to determine the app's future in the United States. While signing the order, Trump suggested that the U.S. government should hold a 50% stake in TikTok's American operations in exchange for keeping the app operational. He also warned that tariffs could be imposed on China if Beijing failed to approve a deal. The popular short video app, used by 170 million Americans, was briefly shut down on Saturday, just before a law requiring its sale by Chinese parent company ByteDance took effect. The law, passed by Congress and upheld by the Supreme Court, aimed to address national security concerns about the misuse of Americans' data. TikTok was restored the next day, and the company expressed gratitude to Trump for ensuring it would not face fines during the delay period. However, the app remains unavailable for download in major app stores. Trump's executive order directs the Attorney General to pause enforcement of the law to explore alternatives. However, legal experts question the order's validity, as the legislation does not provide the authority to extend deadlines unless ByteDance secures binding agreements for a sale. Representative Frank Pallone criticized the move, accusing Trump of bypassing national security laws, passed by a bipartisan majority. Trump's stance on TikTok marked a shift from his first term when he attempted to ban the app in 2020 over data security concerns. More recently, he has credited TikTok for helping him connect with young voters during the 2024 presidential election. Trump's proposed government stake in TikTok, which could be valued in the hundreds of billions of dollars, raises unprecedented questions about government intervention in private businesses. Meanwhile, China is willing to support a deal to keep TikTok operational in the U.S. The Justice Department has been instructed to assure major companies like Apple and Google that they will not face legal repercussions for continuing their business with TikTok.
Bitcoin and other major cryptocurrencies experienced a significant decline on Tuesday as investor enthusiasm surrounding President Donald Trump's inauguration began to wane. Market sentiment, which had been optimistic about Trump's pro-crypto stance, cooled amid a lack of concrete policy announcements regarding digital assets. According to CoinGecko data, Trump, a cryptocurrency token launched last week to represent the new U.S. president, plummeted by 26% within 24 hours. Meanwhile, a meme token First Lady Melania Trump released over the weekend dropped by 54% in a single day. Bitcoin declined 4%, trading at around $103,550. Other major digital assets, such as Ether and XRP, followed suit, falling 2% and 6%, respectively. Investors anticipated that Trump's administration would bring favorable regulations and policies to the crypto market, including the possibility of a federal Bitcoin reserve. However, the absence of specific policy details in Monday's inauguration speech left markets uncertain, prompting a sell-off. Kenneth Lamont, a principal at Morningstar, advised investors to approach the market cautiously and avoid impulsive decisions driven by market hype. If Trump follows through on his campaign promises, cryptocurrency markets could experience significant growth, Lamont said. However, investors should resist the temptation of jumping in due to the fear of missing out and instead take a measured approach. The cryptocurrency market is known for its extreme volatility. Bitcoin has previously seen price swings of thousands of dollars in a single day, while altcoins such as Ether and XRP tend to exhibit even greater fluctuations. Lamont further cautioned retail investors about the risks of market timing, noting that many often buy or sell at inopportune moments. He stressed the importance of staying informed and avoiding speculative trading decisions based on short-term market movements.
US-based International Paper is poised to receive European Union regulatory approval for its $7.12 billion or £5.8 billion acquisition of UK-based packaging company DS Smith. According to sources familiar with the matter, The approval comes after International Paper agreed to divest certain assets to address competition concerns. The deal, announced in April last year, is expected to significantly enhance International Paper's presence in the rapidly consolidating European paper and packaging industry. The European Commission, set to rule on the acquisition by January 24th, has not commented on the ongoing review. Sources did not disclose specific details regarding the assets to be sold as part of the agreement. However, divestitures of overlapping operations are a common requirement for mergers of this scale to alleviate antitrust concerns and maintain market competition. DS Smith operates in over 30 countries and provides packaging, paper, and recycling services to major global companies such as Amazon and Unilever. The acquisition will strengthen International Paper's position in the European market by integrating DS Smith's extensive operations and customer base. This acquisition follows a trend of consolidation within the packaging industry. In 2024, Irish packaging giant Smurfit Kappa completed its $11 billion acquisition of US-based WestRock, further illustrating the ongoing mergers and acquisitions within the sector. Industry analysts suggest that International Paper's European expansion will provide strategic benefits, including a broader product portfolio and enhanced supply chain efficiencies. However, regulatory scrutiny remains challenging, with authorities closely examining market impacts and competitive dynamics before approving such large-scale transactions.
U.S. President Donald Trump has announced a massive private sector investment of up to $500 billion to develop artificial intelligence infrastructure in the United States. The initiative, spearheaded by OpenAI, SoftBank, and Oracle under the joint venture Stargate, aims to position the U.S. ahead in the competitive AI landscape. Speaking at the White House alongside SoftBank CEO Masayoshi Son, OpenAI CEO Sam Altman, and Oracle Chairman Larry Ellison, Trump revealed that the companies have committed an initial $100 billion for immediate deployment. The remaining investment will be phased over the next 4 years. The initiative is expected to generate over 100,000 jobs across the country. Ellison stated that the first 20 planned data centers, each spanning 500,000 square feet, are already under construction in Texas. These AI-powered data centers will focus on applications such as analyzing electronic health records to assist doctors in patient care. The executives credited Trump's leadership for their decision to invest. Son told Trump, "We wouldn't have decided to do this unless you won." Altman also acknowledged the administration's support in facilitating the project's goals, which include developing artificial general intelligence. It remains unclear whether this announcement is a new initiative or an extension of a previously reported $100 billion AI supercomputer project called Stargate, which OpenAI and Microsoft plan to launch in 2028. Trump's announcement comes after his administration rolled back former President Joe Biden's AI executive order, which aimed to regulate AI risks. The president pledged to support the energy needs of AI data centers, which consume vast amounts of electricity. The North American Electric Reliability Corporation recently warned that half of the U.S. faces potential power shortages due to rising energy demands. Following the announcement, Oracle's stock surged, with NVIDIA, ARM Holdings, and Dell shares also gaining. AI investment has surged since the launch of OpenAI's ChatGPT in 2022, as companies increasingly seek to incorporate AI into their products and services.
Kingdom Holding Company, the investment firm owned by Saudi Prince Al-Walid bin Talal, has expressed interest in investing in TikTok if Elon Musk or other potential buyers acquire the short video platform, CEO Talal Ibrahim Al-Mayman revealed in an interview with Al Arabiya TV on Wednesday. The search for a buyer for the Chinese-owned social media giant continues in the United States after TikTok was temporarily banned and later reinstated following an executive order from President Donald Trump. The order granted a 75-day extension to delay the ban's enforcement, allowing potential buyers more time to negotiate a deal. On Tuesday, Trump stated he was open to Musk purchasing TikTok if the Tesla CEO was interested. Kingdom Holding Company already holds stakes in Musk's social media platform, X, formerly Twitter, and his artificial intelligence venture, XAI. Saudi Arabia's sovereign wealth fund, the Public Investment Fund, holds a minority stake in Kingdom Holding Company, with 5% of the company's shares listed on the Saudi Stock Exchange. Kingdom Holding Company, known for its diversified investment portfolio spanning petrochemicals, healthcare, real estate, and e-commerce, is cautious about entering the cryptocurrency market. Al-Mayman reiterated the company's stance, citing investment principles inspired by Warren Buffett. "If you can't buy goods with cryptocurrencies, we see no reason to invest in them."
Several Meta platform social media users reported on Wednesday that their accounts automatically refollowed the profiles of President Donald Trump, Vice President J.D. Vance, and First Lady Melania Trump, despite having previously unfollowed them. This issue arose after Trump assumed office for his second term, frustrating and confusing many users. When a new presidential administration takes office, official White House social media accounts are typically transferred to the new leaders. This transition occurred in 2017 and 2021 when Trump and Biden assumed the presidency. However, users claim they found themselves re-following the accounts without consent even after unfollowing the president, vice president, and first lady accounts multiple times since Monday. Facebook user Anna Springer on the Meta-owned platform Thread said, "I, like others, repeatedly unfollowed Trump and Vance on Monday, only to discover that I was following them again. Not sure if it was just a glitch or something intentional, but it definitely happened." Some users even reported blocking the accounts, only to see them reappear in their following lists. Meta has yet to provide an official statement, but Andy Stone, Meta's communications director, addressed the issue on X, formerly Twitter. Stone clarified that people who followed the Biden administration's official accounts were automatically rolled over to the Trump administration's corresponding accounts. Stone stated, "People were not made to automatically follow any of the official Facebook or Instagram accounts for the president, vice president, or first lady," adding that the White House manages these pages and that changes in account ownership may cause delays in processing follow and unfollow requests. The White House has not responded to requests for comment. Celebrities like singer Demi Lovato and comedian Sarah Kalana have also experienced the issue. Lovato shared an Instagram story showing she had unfollowed Vice President J.D. Vance twice in one day, while Kalana questioned why her Facebook account had automatically followed Melania Trump. Social media followers allow users to see posts from the accounts they follow, usually with a simple click. However, the automatic refollowing issue has sparked concerns over user autonomy and Meta's account management processes.
The UK's Competition and Markets Authority has appointed former Amazon executive Doug Gur as its interim chair. This decision follows the unexpected resignation of former chair Marcus Bockerink, whose departure was announced simultaneously. The UK government stated that Gur's appointment aims to drive economic growth and support businesses amid an evolving regulatory landscape. Jonathan Reynolds, Secretary of State for Business and Trade, defended the move, emphasizing the government's commitment to fostering economic prosperity. Reynolds said in a statement, "This government has a clear plan for change, to boost growth for businesses and communities across the UK. As we've set out, we want to see regulators, including the Competition and Markets Authority, supercharging the economy with pro-business decisions that will drive prosperity and growth, putting more money in people's pockets." The Competition and Markets Authority plays a crucial role in ensuring fair competition in the marketplace by investigating potential breaches of antitrust regulations, scrutinizing mergers, and protecting consumers from unfair trading practices. Over the years, the agency has taken significant action against Amazon, including during Gur's tenure at the company. Recent investigations have targeted Amazon's handling of fake reviews and concerns about favoritism toward its brands over third-party sellers. While Amazon agreed to changes to resolve some of these issues, the watchdog remains vigilant. In 2024, the Competition and Markets Authority reviewed Amazon's $4 billion investment in artificial intelligence firm Anthropic, but concluded it did not constitute a merger. Meanwhile, the watchdog continues to probe Google over potential antitrust violations related to its search services. Doug Gur, who joined Amazon in 2011, brings a wealth of experience to his new role. He served as president of Amazon China from 2014 to 2016 and later became country manager of Amazon UK, a position he held until 2020. Most recently, he served as the director of London's Natural History Museum. Despite concerns about his ties to Amazon, the UK government appears confident that Gur's leadership will enhance the Competition and Markets Authority's effectiveness in balancing economic growth with regulatory oversight.
The UK's Competition and Markets Authority has launched an investigation into Apple and Google's dominance in the mobile ecosystem to determine whether the companies are violating the country's new digital competition rules. The regulator is conducting parallel probes into the tech giants to assess whether they hold strategic market status in key areas such as mobile operating systems, app stores, and smartphone browsers. The investigation aims to evaluate the potential impact on consumers and businesses that rely on these platforms to develop and distribute their apps and services. Apple has responded to the investigation, stating that it supports dynamic markets, encouraging innovation and competition. A spokesperson emphasized Apple's commitment to earning user trust and highlighted the positive impact of the iOS app economy in the UK, which supports thousands of jobs. The company expressed its willingness to cooperate with the Competition and Markets Authority. Similarly, Google's competition director, Oliver Bethel, defended the Android platform, calling it a successful open-source operating system that has expanded consumer choice and reduced costs. He urged regulators to find a balanced solution that fosters innovation and growth without limiting consumer choice. This investigation follows recent leadership changes at the Competition and Markets Authority, with Doug Gur, a former Amazon UK executive, stepping in as the new chair. The UK government has tasked regulators with promoting business growth by removing market barriers. The probe follows the implementation of the Digital Markets, Competition and Consumers Act, a new law designed to prevent anti-competitive behavior in digital markets. Under this legislation, the Competition and Markets Authority can impose changes on companies with strategic market status to prevent monopolistic practices. The Competition and Markets Authority will examine three key areas: the level of competition between Apple and Google, whether their market power extends into other business sectors, and potential exploitative practices. With nearly all smartphones in the UK running either Apple's iOS or Google's Android and millions of users relying on their platforms daily, the Competition and Markets Authority believes increased competition could spur innovation and economic growth.
Google has announced a $250 million deal with HTC to advance its plans for the Android XR ecosystem. Several HTC's Vive engineering team members will join Google as part of the agreement. The tech giant has described them as an incredibly strong technical team with a proven track record in the VR space. HTC, which introduced its first consumer-focused Vive VR headset in 2016 in collaboration with Valve, has continued to innovate in the extended reality space. Its latest product, the Vive XR Elite, follows the launch of its first standalone consumer VR headset, the Vive Focus Vision, last year. Under the agreement, Google will gain a non-exclusive license to HTC's XR technologies. This allows HTC to retain its intellectual property and continue developing and supporting its XR hardware. The partnership also leaves room for potential future collaborations between the two companies. Google believes the deal will accelerate its efforts across the XR ecosystem, including headsets and smart glasses. In December, Google outlined its vision for a unified Android XR ecosystem to support various mixed and virtual reality devices. This year, the first Android XR devices are expected to launch, including a highly anticipated headset developed in partnership with Samsung under the codename Project Muhan. Acquiring HTC's XR expertise could strengthen Google's competitive position in the evolving immersive technology landscape, where rivals such as Meta and Apple have already made significant strides. HTC, despite the transfer of part of its XR team, remains committed to its XR business and plans to continue developing innovative solutions for consumers and enterprises. The deal is still subject to customary closing conditions and is expected to be finalized within the first quarter of the year.
U.S. President Donald Trump has issued an executive order establishing a cryptocurrency working group tasked with drafting new digital asset regulations and exploring the formation of a national cryptocurrency stockpile. This move marks a significant step in Trump's promise to revamp the U.S. crypto landscape and provide clearer regulatory frameworks for the industry. The order mandates the protection of banking services for cryptocurrency companies, addressing industry concerns that regulatory bodies have pressured banks to cut off crypto firms, an allegation regulators previously denied. Additionally, the order explicitly bans the development of central bank digital currencies, CBDCs, which Trump believes could challenge existing cryptocurrencies. In a major win for the crypto industry, the U.S. Securities and Exchange Commission rescinded accounting rules that had made it costly for publicly traded companies to safeguard digital assets on behalf of clients. Crypto advocates argued that these regulations had hindered the broader adoption of digital assets. Trump's pro-crypto stance starkly contrasts the policies of former President Joe Biden's administration, which took a tougher regulatory approach, suing major crypto exchanges like Coinbase and Binance for alleged violations of U.S. laws. The industry has widely welcomed Trump's order, with Nathan McCauley, CEO of Anchorage Digital, calling it a sea change in U.S. digital asset policy. The executive order also calls for a comprehensive regulatory framework for cryptocurrencies involving key government figures, such as the Treasury Secretary and the heads of the Securities and Exchange Commission and Commodity Futures Trading Commission. This framework will address various aspects of digital assets, including stablecoins, cryptocurrencies pegged to the U.S. dollar. A notable component of the order is the potential creation of a national digital asset stockpile, which may consist of cryptocurrencies lawfully seized by the federal government. However, details on the implementation remain unclear, and experts are debating whether Congress's approval will be required.